What's up, everybody? We are doing this again. First time, there was a bit of an issue with the audio. Thanks for letting me know. But we're still traveling, so there may be some technical difficulties sometime. But we got a lot to cover with what is going on with crypto today. Because, first of all, Bitcoin has still been making a major move. We broke above $45,000 per coin at one point in time. We have a lot to cover with regards to a couple of key technical indicators with what's going on, where the price is going to be moving over the next couple of weeks and next couple of months. I want to go over three technical indicators in particular. After that, we're going to talk a little bit about what is going on with whale accounts because they've been picking up, accumulating more Bitcoin, more Ethereum behind the scenes, and then just recently they had a bit of a change in what they were doing, their strategy. So I want to let you guys know what's going on with the Bitcoin whale accounts. After that, we're going to talk a little bit about Ethereum because everyone's saying, oh, crypto's doing great. We're seeing Bitcoin, Ethereum, Cardano, Dogecoin, XRP. Everything is doing great, but there are a couple of warning signs with regards to Ethereum, which could signal, maybe a bit of a sell-off. So I just want to let you guys know what is going on there because I don't want to say everything is just going great because while it is, there always are a couple of warnings that I do want to go over with that. And then at the end, we're going to talk about what is going on with institutional investors and what to watch for in the week ahead. So, let me know if you guys can hear me, and also if you enjoy this sort of content, please be sure to like the video down below, subscribe to the channel if you're new, turn on the bell notifications, and if you want to see exactly what I am buying and selling in real time, well then make sure to follow me on public.com. Go to public.com/Michael, and you'll see exactly what I'm buying and selling in real time. And if you use the code Michael, you'll get up to $50 in a free stock. And honestly, this is my favorite investing app out there, investing/social media app. I'm not just talking about it because, like promoting it. I'm actually really enjoy it, and it is my favorite investing app. I like it better than Robinhood. I like it better than Twitter. It's easy to communicate, easy to see what I'm buying and selling and talk with you guys. But anyways, let's take a look at what is going on with the crypto market. So here we go. Crypto market right now. Let's get rid of that on the right. Crypto market right now is up about 2.45%, and the big movers over the last couple days are the same. They've been Bitcoin and Ethereum. Bitcoin's up over 7.4% in the last 7 days, up 2.6% over the last 24 hours. Ethereum, relatively flat, but we've had almost 3 weeks in a row, like 3 weeks, where every single day has been in the green for Ethereum. We're up over 19% over the last 7 days. Same story for all the other altcoins. Dogecoin's up 13% over the last 24 hours. We're seeing Cardano's up. Everything is still relatively, in the green for the last 24 hours after the massive rally we have seen. First thing I want to go over is what is going on with Bitcoin, a couple of technical indicators, because we have seen Bitcoin and Ethereum both start to reach record highs in terms of prices. Not record highs like all-time record highs, but we've started to break through a couple of key resistance levels. Ethereum has broken through the $3,000 per coin resistance. Bitcoin has broken through $40,000 per coin and even broke through $42,500. So now when we start looking at the charts for Bitcoin, for Ethereum, there is nothing holding us back. There's no resistance in the way for us to reach new record highs. For example, with Bitcoin, when we start to look at the charts, we can see that we're well above the 50-day moving average on the 4-hour chart. We're also well above the 200-day moving average on the 4-hour chart as well. And if we look at the charts, since July 22nd, we have had a consistent upwards trend. So right now, there is nothing, no resistance levels in the way to stop us from getting to that next point, which is around $47,500, $48,000 per coin. You could see our last resistance was right around $42,000 per coin, but we have officially broken above all of those. Moving forward, according to this recent article posted by Bloomberg, research study, they show that what has been going on with the market is, first of all, we had the B-Word Day event back on July 21st. That helped trigger the entire crypto bull market. That is what started this entire bull market, crypto B-Word Day event between Jack Dorsey, Elon Musk, and Cathie Wood. That helped trigger this massive bull rally. Then we started to see Bitcoin whale accounts start to accumulate more. Then we start to see a couple of regulators come out and talk about crypto, like Gary Gensler. And all of this has been adding on to each other, and that is why we have seen the market up. According to Paulo Ardonio, Chief Technology Officer at Bitfinex. He said a mood of optimism appears to have returned to cryptocurrency markets right now for all coins. We're starting to see people take a little bit of a more risk-on approach. So we're seeing, what that means is we're seeing Bitcoin dominance drop, and people are getting more into altcoins, and that is a sure sign that we're entering a bull market, that we are in a bull market at this point, because whenever people start to sell off their Bitcoin, start to get into some of the smaller altcoins, it shows that people are very optimistic about where crypto is going over the next couple of weeks, next couple of months. It is a trend we have seen happen time and time again, people taking on more risk, taking on more altcoins, Bitcoin dominance, which is at 46% drops. That means people are very bullish on crypto. The sentiment in the market is overall very positive. Okay, so that's the basic market. That's what's going on. A lot of positive sentiment going on. A lot of good technical indicators in terms of key support, key resistance levels. But now let's go over what specifically is going on with Bitcoin. Because with Bitcoin, we have had a couple of things coming up that could change what is going on with Bitcoin, where the price is going moving forward, and this indicates the whole entire market. So, on Wednesday, August 11th, 2021, we're going to have the next inflation report from the United States Bureau of Labor Statistics. This comes out on August 11th, and that is July's inflation report. A lot of analysts are forecasting this is going to be right around a 0.5% spike, and these projections appear after the Consumer Price Index jumped to 5.4%, which is the highest we had seen it in the last 13 years. So people are going to be keeping an eye on this moving forward. But one thing to keep in mind, which we're seeing right now, let's pull this up. We can see that right now, we are seeing this right here is Bitcoin entities net growth. It's a key technical indicator that shows how many new people, new Bitcoin addresses are getting involved, owning Bitcoin. And what we can see is entities net growth. 14-day moving average right here has spiked dramatically since July 21st. That is when we started to see the market really pick back up. We started to see this massive bull market. And what we're seeing is that not only is the price increasing, but new entities are getting involved. New people, new companies, new institutions, more Bitcoin addresses are getting involved, which shows us that not only are people who previously owned Bitcoin buying more, but also new people are getting involved. The second technical indicator, what we're going to look at, well, first of all, with that is according to Glassnode, they say that the amount of new Bitcoin entities has hit an all-time high. You could see like net growth right here. It's higher than it was in January of 2018, higher than it was back in about February of this year. We are at all-time highs in terms of how fast we're growing, the new Bitcoin entities that are getting involved in crypto. But anyways, the second technical indicator I do want to look at is what is going on with regards to, where is it? Right here. So long-term holders versus short-term holders. So what we're seeing is that right now, long-term holders for Bitcoin account for over 66% of the entire Bitcoin supply. Short-term holders is down to nearly 20%. And what this shows us is that recently, when we had that bit of a sell-off, everyone who was selling off was selling to these long-term holders, and they continue to accumulate more and more. And that is very, very, positive sign for the crypto market, because what that shows us is that all this Bitcoin that is being sold to people who have absolutely no intentions of selling their positions anytime soon. These are people who have owned Bitcoin for more than 6 months, and they have no plans on selling it anytime soon. So this is very positive for the crypto market, because imagine if the people who are buying are people who have held it long term historically, well, that's more supply that's essentially taken off of the market, and it's going to help to push the price even higher as we start to see some of these big money players get involved. So first thing is with regards to, like we said, Bitcoin entities, net growth. There are more of them getting involved. The second thing is with regards to what is going on for long-term holders versus short-term holders. Long-term holders have been accumulating more and more Bitcoin, while the people who were selling off were short-term holders. And then the last thing I do want to go over is with regards to the fear and greed index. So, fear and greed index, you can see right here, there are a bunch of different colors. It's this chart right here. There's red, orange, yellow, green, and there's even dark blue, which we don't see on the chart. But what the chart shows us is that, let's go over the colors first. So first of all, the red color indicates capitulation. The orange indicates hope and fear. And the yellow is optimism / anxiety, green is belief, denial, and blue is euphoria. So what we're seeing right now is we're right here, this blue circle on the right, the top right of the screen. What we see right now is that we're transitioning from being about in optimism, that yellow category, to moving into green, which is belief. And this is a very positive sign because what it shows us is the last time this happened was back in October and November of 2020. This was right before we saw that massive bull market in the entire crypto space, when we went from optimism to belief. That was exactly when we saw the market flip and we saw Bitcoin's price go from $10,000 per coin all the way up to $60,000 per coin. And now we're seeing the exact same thing happen. We're seeing the market go from that yellow zone, which is optimism. People are excited about crypto, to now the green zone, which is belief. People are really believing that it is here to stay, that we are in a bull market, and that is a very great sign. You can see we have just bounced back dramatically just since July 21st, when we were getting close to being that in that fear range, in that orange range. But you can see now we are officially transitioned back, this blue circle right here, we have transitioning back from yellow, which is optimism, to green, which is belief. So those are the three technical indicators right now for Bitcoin. All of them really look very positive. We have this, we have the first one, which we went over, which is net entities, how fast they're growing, how many new entities are getting involved with Bitcoin. We're at a record high for that. You can see right here, record high, higher than we had been in 2018, higher than we had been in 2021 in about February. Then we're seeing with regards to the second one, which is short-term and long-term holders. Long-term holders are continuing to accumulate more. That's very positive as well. And the third thing going on is what is going on with this, with fear, greed, optimism, and this chart right here. So you can see we are officially transitioning from optimism, which is the yellow, to green, which is belief. And that is exactly what happened back in late 2020 when we saw the entire bull market for crypto start. So those three things are all pointing that we're going to reach new record highs for Bitcoin in 2021. Many analysts are predicting, like we spoke about in yesterday's video, that we could reach a price of $100,000 per coin within the next 4 months. So we'll wait and see what happens. But either way, all the technical indicators are pointing in the right direction for Bitcoin. Institutional investors are getting involved. Mass adoption is taking place with retail investors. And all of this is pointing in the right direction that we're going to see new record highs for Bitcoin by the end of 2021. Next thing I want to talk about is what is going on specifically with regards to Bitcoin whale accounts. Because right now, Bitcoin whale accounts have been doing a lot behind the scenes. We've talked about Bitcoin whale accounts accumulating. We've talked about Ethereum whale accounts having the most Ethereum they've ever had off of exchanges. So we've talked about this, and all of these are positive signs. But what we are seeing now is even more coming out from Bitcoin whale accounts, which is that right now, Bitcoin whales just suddenly moved on August 7th, 2021, $1.7 billion in Bitcoin, according to Sentiment, which is a data analytics company. And blockchain tracker Whale Alert, they post a bunch of alerts on Twitter. They said that they spotted 4 large Bitcoin transactions in which crypto whale accounts relocated 41,671 Bitcoin worth about 1.78 billion in a span of 1 hour. And what we are also seeing, according to the research, is that Bitcoin whale addresses, the addresses holding between 100 and 10,000 Bitcoin, have started to increase dramatically. So both of these things are great signs. We're seeing Bitcoin being moved off of exchanges, which is what we've seen for the last couple of weeks. That shows us that people who are buying these Bitcoin whale accounts, they're moving it off of exchanges. They have no plans on selling it anytime soon. The second thing that we are seeing is that we're also seeing Bitcoin whale addresses increase. So that means big money players are getting involved. So both of those things are looking really good in terms of whale accounts and in terms of where they're actually storing their Bitcoin. They're storing it off of exchanges, in cold storage, in, other wallets, rather than keeping it on the exchange, which means they have a positive outlook for the future. They are very bullish on crypto long term, because if they weren't, they'd keep it on the exchange. They could sell it very easily, within a couple of minutes if they wanted to. But they're taking it off exchanges, which shows us they're very optimistic about it long term. Moving on, I want to talk a little bit about what is going on with Ethereum, because everyone's been talking about, everything's looking great in crypto. How right now we're seeing the entire market getting close to a $2 trillion market cap. We're seeing Bitcoin break through $40,000 per coin. We're seeing Ethereum break through $3,000 per coin. Everyone says things are looking great. But there are a couple of warning signs which I do want to go over with regards to Ethereum, with regards to crypto in general, and just something to keep an eye out on, because while everything's been going great, we've had almost 3 weeks in a row where Ethereum has been in the green every single day. Same with Bitcoin. Bitcoin not as much, but Ethereum has had almost every single day since July 21st be in the green, close in the green. We only had one day where we didn't. So there's a couple of warning signs which I do want to go over. So first is right now, if we look at pure technical indicators, obviously if we've seen so many days in a row in the green, doesn't mean we're going to have a red day. But what we're seeing right now in terms of Ethereum, we're above $3,000 per coin, which is great. But when we look at the daily chart over the last, let's say, month, we can see right here that every single day for the last 3 weeks almost, since July 21st, has been in the green. Every single day except August 3rd has been in the green. Yes, today we're seeing that it looks like we might close in the red, but we have seen a massive rally from less than, $1,800 per coin. We were at $1,790 per coin, all the way up to now above $3,000 per coin. So many people are saying, maybe it's time for a correction. Maybe we're going to see a bit of a correction. But what the data is showing us right now is that, and this is very important. So first of all, technical indicators, we have broken through resistances. When we look at Ethereum, the last resistance we broke through was really at that $2,800 per coin range. We broke through that. We're well above $3,000 per coin. But when we look at a couple of technical indicators, one thing is an on-chain indicator that tracks the total percent of Ethereum addresses in profits, has predicted that we may see a bit of a correction happen very soon, because this indicator is like the so-called percent of addresses in profits for Ethereum. It's not really any sort of exciting name. It's just Ethereum percent of addresses in profits. And what we can see is that right now, let's pull up this chart. Right now, 96.4% of Ethereum wallet addresses are in profit. That means they are making money. That means that people are going to be more likely to sell now. If people had gotten in, let's say when it was about a couple months ago, when Ethereum was at $3,000 per coin, then it went all the way down to $1,700. Now some people might want to sell off their position, and if they're not really bullish on crypto long term, they might say, look, you know what? I put some money in, it went down, it almost got cut in half, down 50%. Now I'm back to where I started. I'm happy, I'm going to get out. So some people are going to do that. And what we're seeing right now is that we are in this red zone. And the red zone is when we cross above 90%, where more than 90% of Ethereum wallet addresses are in the profit, are making money. So that is called the red zone on this. And what we're seeing is that this is a bit of a sell-off zone historically. When we look back at 2018. The last time when we saw us in 2018, we were in this over 90% range, where over 90% of Ethereum wallet addresses were in the profit, and then we saw the massive sell-off. That was back in 2018. Same earlier in 2021, when in February 2021, when we saw like January through let's say April of 2021, you could see right here that we were bouncing right off. We were above that 90% range, which is that sell zone, that sell-off zone, that red zone right here. We were in that zone for a while, and that is when we started to see the bit of a correction happen, when we saw Ethereum's price go from over $4,000 per coin down to $1,700. So historically, this indicator has showed us that when there's a very high percentage of Ethereum wallet addresses or even Bitcoin wallet addresses in the profit, they're making money. It's historically been a sign that the short-term investors, people who aren't bullish on crypto long-term, people who aren't so sure, it's a sign that these people are going to be selling off, taking some profits, or at least breaking even and getting out of crypto. So right now, just something to keep an eye out on for the next couple of weeks with Ethereum, because we have seen every single day since July 21st be in the green for Ethereum. We are seeing that more than 90% of Ethereum wallet addresses are in the profit, which is a sign that as soon as we see a bit of a downturn, these people are going to be selling off their positions. Even if it's just a one-day correction, we may see a bit of a flash, not a flash crash, but a bit of a quick correction, because these people are going to say, look, I'm in the green, like I'm in the profit. I'm happy if I just take some money off the table and sell my position. So that's something just to keep in mind with regards to Ethereum, with regards to Bitcoin, because it is something we are seeing with the crypto market. So that's, technical indicators. Yeah, they look great. We've seen every single day in the green, but just remember, there's a high percentage of people who are in the profit right now for Ethereum, and when anything might turn, if something goes wrong, it's a sign that we may see all these people sell off their positions very, very quickly. A couple more topics I do want to go over. If you guys are just joining us, please be sure to like the video. It helps me out a lot. It really helps get these videos out to more people. I don't know if you guys remember, but YouTube did delete my channel when I posted a video on Dogecoin and Elon Musk, and ever since then, all the views and the recommendations for my channel have been all out of whack. So the only way we could get it back to where we were before that happened, that was in May or April. But the only way you can get it back to that is if you guys help me out, like the video, and also turn on the bell notifications to make sure you guys are getting the notifications. But anyways, next thing I want to go over is what is going on with a statement with Fidelity Executive. According to the digital assets president at Fidelity, they have like a new entity called Fidelity Digital Assets. It's completely separate, like a new entity from just the regular Fidelity. But this is important because Fidelity, handles trillions of dollars in assets under management. It's important to take a look at what they're looking at. But according to Fidelity Digital Assets president Tom Jessup, might be saying that wrong, but he said there are two emerging themes becoming very, very apparent in cryptocurrency. He's seeing this with institutional investors. He's seeing this with retail investors, and this is all very positive for crypto long term. The first thing which he says is that crypto has really started to become its own unique asset class with its own fundamental drivers. So right now, a lot of institutions some of them are on the fence, but many of them are starting to treat it as its own asset class where they need to allocate at least some of their money into this. Like Kathy Wood had said, she believes that institutional investors are going to start off with 1%, less than 1% of putting their money into crypto. And over time, they're going to start to put more and more money. And she thinks they'll get into, that 5 to 10% range. But according to this Fidelity Digital Assets president, he says that we are starting to see people treat it as its completely own unique asset class, which is something that some people agree with, some people don't, but we are starting to see it happen. The second thing he says we are seeing right now is that we're continuing to see a massive increase in purchase interest over a long period of time. Back about a year ago, many people didn't buy Bitcoin, didn't buy Ethereum. Institutional investors were very few and far between who actually owned Bitcoin and crypto. Now we're starting to see this pick up more and more because people are not wanting to miss out. They don't want to have, a lot of people are experiencing FOMO. They're seeing like MicroStrategy make billions of dollars. They're seeing Tesla put their money into Bitcoin. They don't want to miss out on new and innovative technologies with crypto and, be the one left missing out on this huge opportunity. So right now, we're continuing to see a massive increase in purchase interest and purchases over the last, year or so and in the long period. And then lastly, he said they sent out a survey, and they found that over 70% of respondents intend to have an allocation to digital assets over the next 5 years. So we've talked about how hedge funds want to have about 7% of their portfolios allocated to crypto by 2025. But according to this new study from Fidelity Digital Assets, their survey shows that 70% of respondents want to allocate at least some of their money into crypto. And this is important because it's not just hedge funds. Their survey included like family offices, which are like wealthy families, hedge funds, which we've already spoken about, and more traditional institutions as well, like major financial firms. So they said what they have seen is it's not just hedge funds, it's not just retail investors, but they're seeing a wide range of people from family offices, hedge funds, traditional, institutional investors to regular retail investors. They're seeing that everyone is planning on allocating at least some portion of their money into crypto over the next 5 years. He said right now, according to the survey, according to what they've found, is that the couple things holding people back right now are, first of all, what is going on with regulations? Because people who don't really like crypto, people who are a little bit more hesitant about crypto, the couple of things holding them back right now are regulations. They want to make sure it's regulated by the government, it's safe, they're not going to get scammed, it's not a fraud, because that has been something that has happened in crypto multiple times in the past. So he said that the regulation and regulatory clarity still is an issue for many investors who want to make sure there's a sound footing of regulation or at least a direction of travel before they commit significant assets to the space. And this is like what we've talked about before. Like companies that aren't really technology based, let's say like Johnson & Johnson or Procter & Gamble or Coca-Cola or companies like those always come to my mind because they've been around forever. But companies like that, which have been around forever, which don't really have a need for, technology, like not like the major innovative technology company, well, when are they going to start putting money into crypto? When are they going to start accepting it? And a lot of people have said that the only reason that they would ever start putting money into crypto, the only reason they would only start accepting crypto is when we see that the government has stepped in with regulations. So whether you like them, like regulations or not, ultimately, big money players are not going to get involved, at least a lot of them, until we start to see these regulations in place. They know it's safe, and we're not going to see it happen until these regulations in place. That brings us to one thing that has been going on a lot over the last couple of days, last couple of weeks, and that is with regards to the Senate. Currently, there's a massive infrastructure bill in the Senate, which has been talking a lot about crypto. It's been the talk of in Congress over the last couple of weeks because in this infrastructure bill, what we're seeing is that they put a crypto tax in there, sort of as like a last minute thing. They're like, let's throw a crypto tax in there because we need to have some way to fund this $1 trillion infrastructure bill. So what they did is they threw a crypto tax in there, which has certain regulations for, let's say, brokers, crypto exchanges, Bitcoin mining companies, and just in general about who needs to report certain information and like how they collect information. So either way, right now there's a lot going on in the Senate with regards to crypto, like how crypto should be taxed, who needs to like report this information, over what prices, like if it's over $10,000 or if it's under $10,000, like what needs to be reported and how much is going to be taxed. So that's one thing. We've also seen that Gary Gensler, let me pull that up, but Gary Gensler, who is the chief of the SEC, he's called for significantly more regulations for the crypto space. Here we go. SEC Chair Gary Gensler, he came out and said that we need to have more regulations in crypto. Right now, it's the Wild West. So that is the other thing going on. People, when he first was appointed as the chief of the SEC, were very excited because he had taught, we've spoken about this, but he's taught cryptocurrency, blockchain, and all, crypto and digital asset technology at MIT for years. He taught it, and people were like, oh, finally, we have someone who likes crypto, someone who understands it, who's going to be in charge of the SEC and has a major role in regulations. People thought that was going to be great for crypto. There weren't going to be many regulations, but now, he's come out multiple times and said, look, there needs to be regulations. He likes the technology, but there has to be regulations in order for big money players to get involved, in order just to make sure people are protected from fraud. He said the number one goal of the SEC is to protect people against fraud, make sure people aren't scammed out of millions of dollars or, hundreds of thousands of dollars. They want to make sure people are protected. So the one analogy, which I do like to talk about with this, is he had said that when cryptocurrency was first, like when driving was first created, like when people first got cars were first allowed on the road. There weren't street lights. There weren't street signs. There weren't seat belts, and people got hurt. Same with crypto. At first, it was like anyone could create a crypto. You still can, but there was like no regulations in place, and people are still getting scammed out of billions of dollars. There was a huge crypto scam in South Africa with AfriCrypt and with a number of crypto organizations where people were scammed out of their life savings. And that's what they're trying to protect against. Same with driving. At first, you have this technology, a car, but you don't have street signs, you don't have street lights, you don't have, seat belts. And then over time, at first it wasn't safe. More people died. But now, got hurt. And now they have more regulations in place. They have street signs, they have stoplights, they have, people need to have driver's license, they have seat belts, laws for seat belts. And is much safer. So he says that's where we are for crypto right now. We're at the stage where we have this technology. We're very early on, but we're like before we have the streetlights and before we have the stop signs and before we have all the rules and laws in place. We are right now at the point where people are using it, but we don't have all those rules in place. And he says that moving forward, that should be something that will ultimately help crypto, whether people like it or not right now. And then lastly, what we have with regards to regulators is what is going on with, like we said, this infrastructure bill. But with this infrastructure bill, last minute, there's been a couple of amendments that some senators have proposed. I'm pulling it up right now. They have proposed a couple of amendments to this infrastructure bill, sort of last minute. And like Elon Musk, Brian Armstrong, who's the CEO of Coinbase, they've come out and said that they are not really happy with these new amendments that are just being thrown into this infrastructure bill, sort of as a last minute thing, because what they're talking about is very important to technology and the development of cryptocurrency and digital assets in the future. So the couple of things which these amendments are talking about is essentially they're sort of calling out and restricting certain crypto technologies like proof of stake. They're attacking proof of stake in particular, which in my opinion, we spoke about this the other day, but doesn't really make a lot of sense. Joe Biden, the U.S. government, always talks about energy efficiency, how we want to spend more money to make, the country a greener country, use more sustainable resources, be better for the environment. But now with this new amendment that has been submitted, and part of this infrastructure bill, which they sort of just threw in last minute, it attacks proof of stake technology in cryptocurrency. So like we spoke about the other day, let me know what you think, but there's either one or two things that are going on here. Either one, the White House and senators don't really understand proof of stake versus proof of work. Proof of stake is significantly more energy efficient for those of you who don't know. Proof of work is not as energy efficient and it's not as good for the environment. In addition to this, right now with Ethereum, we're seeing it transition from proof of stake to proof of work to proof of stake. So when we're starting to see the White House and senators and Congress start to call out and specifically call out proof of stake technology in this new bill, well, it could hurt cryptos like Ethereum. It could hurt cryptos like Cardano and other coins that rely on proof of stake technology. So we'll keep an eye on this. And that is one thing. It's either that senators don't understand it and they're just throwing it in there just because, or the other reason is that what's the other reason? The other one is that it could just be that the central bank digital currency in the U.S., one that they've been working on, like Jerome Powell has come out and said, they've been talking about it, they've been researching it, and they've been working on it. The other reason could be is that the next, like when they do release a central bank digital currency, it might be proof of work rather than proof of stake. So maybe they're just trying to, hinder proof of stake and that technology development. But either way, what we've seen is that Elon Musk come out, tweeted about this, said the government shouldn't try and pick the winners and the losers in the crypto space. They should let technology develop, let people, figure out what's the most efficient, what's the best for the environment, what's the best in terms of, scalability for transactions per second, what's the best in terms of, the actual technology, rather than try and put regulations in place on one versus the other. Because essentially what they're doing with this bill is you could have the same exact product that rely on different technologies. One relies on proof of work, one relies on proof of stake, and there could be completely different rules in place for one versus the other, and it could really hurt the development of crypto long term. Because first of all, everyone has always talked about Ethereum, how it's going to be huge when Ethereum moves over to proof of stake. It's going to be great for Ethereum because it's going to be able to be more scalable, going to be able to handle more transactions per second. It's going to be, 100 times more energy efficient, which has been a big concern about Bitcoin. And so these are things that people have been excited about. And now with this new infrastructure bill, specifically going to penalize new proof of stake technology adoptees, well, that could be something that really could have a negative impact, at least short term, on crypto. The good news is if there's regulations in place in the U.S. for proof of stake, they always could move elsewhere. We've seen that happen with Bitcoin miners, cryptocurrency companies in China. When there were regulations put in place, people just left. The companies relocated elsewhere in the world. That can always happen, but it's not a great sign when we're starting to see the White House Congress start to talk about putting regulations into place on crypto, like specific technologies. Like, yeah, I get it. There's going to be taxes. There's going to be specific things in place for crypto in the US, certain regulations, but putting regulations on certain technologies, that seems a little much at this point in time. It's like, let the technologies develop and then figure out what regulations to put in place. But we'll see what happens. What's up, Lewis? What's up, Tavion, Tristan, Master Augmented Production, Crypto Mafia? What is up, everybody? Yeah, we talked about a couple of the risks with regards to Ethereum and crypto right now, so make sure to check that out. But yeah. So people are saying crypto is going down right now. There are definitely a couple of warnings that we talked about in the video, just things you need to keep in mind moving forward. But whether we're going up or down today, there are some things just to keep in mind. And then lastly, I do want to talk a little bit about what is going on with adoption and like mass adoption in particular. So right now, what we are seeing is that Bitcoin ATMs, there's a company called Bitcoin Depot, I believe. Yes, Bitcoin Depot. They came out and recently had a partnership with Circle K. And it's a long-term partnership in the US and in Canada. And right now, Bitcoin Depot has over 700 Bitcoin ATMs in 30 states in the US. And with this new partnership, their goal is to have Bitcoin ATMs installed in all 50 states across the US. Right now, there's over 20,000 total Bitcoin ATMs in the US, but Circle K and this new partnership with Bitcoin Depot aims to make it even more common to have Bitcoin ATMs. And for those of you who aren't familiar with what they are, everyone's like, well, how do Bitcoin ATMs even work? Well, essentially, Bitcoin ATMs, first of all, are great for mass adoption because, like what I've spoken about before, is if there weren't ATMs, significantly less people would own cash. But because there are ATMs, people can easily get cash. Same with Bitcoin. If it's easy for people to get Bitcoin, then more people are going to have it. So it's just, what's the easiest form of payment for people to use? But anyways, the way the Bitcoin ATMs work is you essentially could just put cash into the ATM and quickly, easily buy crypto. You could also use debit cards and credit cards. I am pretty sure, you can correct me on that if I'm wrong, I'm 100% sure you can just put cash in the Bitcoin ATM and you can get Bitcoin. And you may be thinking, how does that work? You don't have an actual coin. But the way it works is that you just connect it to your cell phone, create a digital wallet to house these funds, and it works exactly like that. Just, you have your digital wallet address and you could just put cash in and have that money sent to your wallet address. The important thing about this is that right now, in states like New York, in states all across the U.S., there is a pretty significant unbanked population. In New York, according to a recent study, the unbanked population accounts for about 10% of New York households, according to the New York City Department of Consumer and Worker Protection. And what's important about this is that people who are unbanked don't have a way to store their money digitally. They have to keep, just cash. That's their only option. If you don't have a bank account, you only can have cash. But now, for people who are unbanked, people who are part of the unbanked population, they can just go ahead, put their cash into this Bitcoin ATM, and have money sent to a wallet address on their phone. And yes, I get it. Not everyone's going to want to do it because they can't pay for all their bills that way. But still, at least it's a new way, a new option for people who want to be able to store their money digitally, who are unbanked. If people don't want to have a bank account, they're part of the unbanked population, at least this gives them a second option. Rather than going to a bank, creating an account, having to worry about all of that, now people have another option where they could just go to an ATM, put their cash in the ATM, and be able to have at least some form of digital, be able to store their money digitally rather than just have to keep all of their cash wherever they have it. So we'll see what happens with that, but that is very, exciting to see these partnerships continuing to grow. And then lastly, just a couple more stories. If you guys are just joining us, we talked a little bit about Bitcoin, what's going on with whale accounts, and big warnings just to keep in mind with Ethereum and crypto in general. So make sure to check those out if you haven't seen them already. And also, if you're new, please be sure to like the video, subscribe, helps me out a lot. And if you want to see exactly what I'm buying and selling in real time, well, then make sure to follow me on public.com. Just go to public.com/Michael, and you can see exactly what I'm buying, what I'm selling completely for free. It's not like a Patreon where you have to pay. You just follow me like like on Twitter, and you just follow me on this public.com investing app, and you'll see all my holdings right there. It's not a full comprehensive list, but I definitely have, I'd say, about 90 or 95% of all my holdings. You could see what I own in that account. And then lastly, a couple things I do want to talk about is with regards to a couple of altcoins. So first we'll go over what's going on with we'll first go over what is going on with Singapore. So this story I just found the other day, late last night. And so Singapore just came out with a couple of new announcements to license digital payment providers, and they approved crypto exchanges. So important thing here is that the Central Banking Authority of Singapore has informed digital payment service providers that's going to license them to operate under its jurisdiction. So right now, according to regulators in Singapore, they said they have that several out of the 170 applicants are going to be granted official approval, the official licenses they need to operate in the country. And previously, we had seen a lot of issues in Singapore and overseas with companies like Binance, with a couple of other crypto exchanges. But the good news here is that now we're finally starting to see countries all around the world, allow and give the necessary licenses to crypto exchanges, whether we're talking about Binance, whether we're talking about payment service providers, whether we're talking about, whether we're talking about crypto exchanges, payment service providers, Bitcoin mining companies, we're starting to see that more licenses are being given out in the crypto space that is going to allow for further growth. Because we know digital payment service providers in Singapore, while everyone's like, why do I care about Singapore? The important thing here is not that it's Singapore, but the important thing here is that it's helping grow cryptocurrency by allowing more people to actually pay at stores and locations with it. So that is something that's very exciting, continuing to see this growth moving forward. And then lastly, what I do want to talk about is what is going on with Ethereum and EIP 1559. Everyone's been talking about Ethereum, the London hard fork, which took place just last week. And everyone's like, well, what's the significance of this? The significance of this is that with the biggest upgrade on this is called EIP 1559, and with it, they have been burning a certain amount of Ethereum, and what this does is essentially makes Ethereum a deflationary asset. Just think of burning, when someone says burning Ethereum, burning Bitcoin, whatever it is, it's essentially making it so that Ethereum is no longer part of the supply. And I'm trying to find the chart here for you guys, but there is a specific, here we go. Anyways, there's a website that we've gone over the last couple days where you can track exactly how much Ethereum has been burned. Can't seem to find it right now, but either way, it's been over, last time I saw it was over 12,000 Ethereum have been burned over the last 4 or 5 days since we saw the rollout of the Ethereum London hard fork. And Vitalik Buterin has come out and said that with this London hard fork, we are setting the stage for ETH 2.0, which should be rolled out in Q1 of 2021. Vitalik Buterin has said this London hard fork, EIP 1559, have been some of the most important upgrades for Ethereum that we have ever seen, and they're going to help make Ethereum help prep it for ETH 2.0. So right now, London hard fork had 4 different software upgrades. The most important was EIP 1559, which made Ethereum like a deflationary asset, essentially by burning Ethereum coins, taking them off of the total supply. And then now what we're waiting for, moving forward, which is very exciting, is going to be ETH 2.0, which is going to make Ethereum significantly more energy efficient, move from proof of work to proof of stake, and it's also going to help with scalability, make it much more energy efficient, just a couple things like that. So that's what's going on with crypto. In the week ahead, the couple of things we need to keep an eye out on are going to be what is going on with regards to regulations. We have the infrastructure bill in the Senate. We're going to need to see what happens in the Senate. If it gets passed and gets sent to the House, we'll need to keep an eye on that, see what sort of crypto regulations are included. The next thing we need to keep an eye out on this week is going to be what is going on with regards to Bitcoin and Ethereum technical indicators, because we have spoken about a couple of technical indicators for Bitcoin that look very optimistic, but on the other hand, with Ethereum and with some of the altcoins, we have seen, there there are some indicators that we could see a bit of a correction. Not a crash, but at least a correction. So we need to keep an eye out on some of those technical indicators. And then the third thing we also need to watch out for in the coming days is going to be what is going on with regards to whale accounts and institutions. We've seen a lot of talk from Gary Gensler about Bitcoin ETFs, what's going on with institutional investors, and when we could potentially see, Bitcoin, Ethereum ETFs approved, what's going on with whale accounts, if they're buying or selling. So all these things are something we just need to keep an eye out in the week ahead. Like we said, first is going to be what is going on with regulators. Second is going to be what's going on with technical indicators, because there's a lot that looks good, but there are a couple of warning signs that we could see a bit of a correction. And the third thing is just going to be what is going on, like we said, with regards to institutional investors and whale accounts. So that's what's really going on with crypto. Hopefully you guys keep an eye out on what is happening with those three things. But I hope you guys enjoyed today's video. If you did, please be sure to like the video, subscribe to the channel if you're new. I appreciate all you guys. Hope you're having a great Sunday morning or evening or whatever time it is near you guys. And I hope you guys enjoyed today's video. And I'll see you guys tomorrow. I'm still traveling. I'll let you guys know when I am home, but we're never going to miss a day, no matter where I am. Even if I'm not home, we're going to make sure we either get a live stream in or at least one video posted every day, no matter where I am. So anyways, I hope you guys enjoyed today's video. And I'll see you tomorrow for another live stream. I don't know where I'll be, but we'll either be in this room or be at another house or we'll be somewhere else. But